Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. We want to talk to Gerard Bond, who is the CEO of OceanaGold. You remember the fantastic mid-size, mid-tier gold producer working in the US, the Philippines, and New Zealand. Good morning. How are you, Gerard?
Very well, Jochen. Good morning, and good morning, everyone.
Yeah, fantastic. Thanks for taking the time. I'm a shareholder of the company. I want to disclose that upfront, really. And first of all, thank you very much for the first dividend payment in a long time.
Yeah, well, we're very happy to getting back to paying dividends, Jochen. Real businesses pay dividends, and we're very happy to be back to paying dividends.
You say something really interesting. Real businesses pay dividends. That's exactly what I love with that business, and I really appreciate that because it shows that you make really money. Yeah, you're not living out of hope and hot air. You have a real business. So 2022, I think it was a great year for the company. I think you achieved a lot of successes on multiple fronts. I read in your press release. So maybe we talk a bit about your multiple successes. What was the most important you have achieved for you?
Well, look, I mean, the most important achievement we had in 2022 was that it was our safest year on record. We had the lowest number of injuries per hours worked in the history of the company. The company's been around for over 30 years. So to safely produce gold is the most important thing. And a safe operation is also a profitable one because if you're running safely, then you're running more predictably, you can run more days per year, and no one wants to be associated with a company that injures people. So to have injury rates as low as ours at industry-leading levels was a really nice window into what was also a very profitable year. We had a year of $132 million in net profit, EBITDA $382 million. We generated positive free cash flow. But to your question, the proudest achievement was that we did it all safely.
Super. Now, that is always very important because there's nothing more horrible when you have fatal injuries and you have to close down the mine, maybe, and not to talk about the people. That's the most horrible thing, that's for sure. But I think this is something, which prevents you from getting in trouble with the business. If I look at your AISC for the year, you had $1,407 per ounce. In the fourth quarter last year, it was $1,602. What will you do, let's say this year, next year, to bring that further down? Because I think margin is key. We have a great gold price today. We are all bullish on gold, but we never know, right?
Yeah, no, look, it's a really good comment, Jochen. I mean, now our job is to produce the gold guidance that we've put out there at as low a price, at lower cost, I should say, so that we get the most advantage of the price. Our gold AISC guidance for this year is 1475. That's around the midpoint, and that's a little higher than last year's, basically because we've got a full year of inflation coming through this year, whereas the inflation surge only started during last year. To your point, we look to get that down. We look to get it down by firstly producing more gold. We have a number of programs across the business, running our asset management, which is about running your assets better to more days per year. Procurement, buying what we buy smarter, that is buy less, buy only what you need, but also engage with suppliers proactively and smartly to make sure we don't pay more than we should. And in both of those two programs, we're confident that we should be able to help drive costs down over the course of the year.
Okay, super. What I saw also, I mean, your guidance looks really fantastic. You want to bring down by 2025 your AISC to 1100 to 1250. I presume this is a function out of the easily, like if I calculated, approximately 30% higher production. So it's a function out of that, because I saw in your capital expenditures, the gross capital went down from 154 million to 58.7 million if I compare 2021 to 2022. That means you can then probably harvest from your investments.
Yeah, look, I mean, it's a great observation. I think OceanaGold is in a very unique position in the gold industry. We're probably one of the only companies that has a near-term production growth profile of the scale that we do. So in 2022, we produced 472,000 ounces of gold, And as you say, by 2025, we're projecting to produce over 600,000 ounces of gold. That's a 9% compound average growth rate per annum over a 3-year period. That's like a 30% increase. And we're really excited by that. It's primarily coming from the development of the Haile underground. At Haile, we opened our mine only a month ago. We've been progressing it now for a few months to get underground. And what we find there is that the gold that we can extract from underground is higher grade, but also has less waste movement associated with that. And that's the principal driver of both the growth in production, but also that reduction in all-in sustaining costs, because you're actually producing, it's costing you less to produce more gold. And that combination of higher production, lower all-in sustaining cost, and lower growth capital, and that's primarily coming from the fact that we will complete the Haile underground build. That positions us to be a strong cash flow producer over the coming few years at current gold prices. So it's a really exciting combination that OceanaGold offers.
Okay, super. Let's switch shortly to the Philippines, to the DPO. I mean, that was a story of itself. You managed it, your team managed it, which is fantastic. And I see always also that you are planning with like 12 to 14,000 tons of copper. So I'm also a big copper bull, not only for gold and silver, because I think copper could easily move, like Pierre Lassonde said, I think 3 or 4 weeks ago in an interview, to $7 per pound. So that would be for you also a big value driver. Do you think there is room to raise the copper production even over the years?
Yeah, look, I mean, one of the exciting things about the DPO is that the ore body is open at depth. What that means is that as we continue to drill wider and deeper, we continue to find more mineralization. And that's exciting because an ore body that has both gold and copper is the dream of every gold producer. I mean, for the same process, you get two metals for the cost of one. So no, we're excited about the potential to increase copper production from underground or extending the life of the mine through that exploration success. And like you, Jochen, we're excited about the potential for copper, particularly given the electrification push globally, to be a metal that faces supply shortages. And when you have high demand and strong, and a limited supply, it's getting harder to find copper, then that bodes well for price going forward.
Absolutely. I saw also in your balance sheet here, you had the average copper price of 382 for 2022 for the DPO. So what's the projection for this year? With what values are you calculating? Because my feeling is this year it will be well over $4, the average price.
Yeah, look, I mean, we for our guidance estimate, we used an assumption of $4 a pound. It's been above $4 a pound all of this year so far from my estimates. And we don't try and pick the copper price, but we pick a price that we think it's most likely to be at least for the balance of the year. And to your point, if a copper price is higher than that, all that results in is that our all-in sustaining costs, as we report, goes lower. We just make more money, of course.
Yeah, definitely. Of course, when we say, okay, now we have spoken about the copper price, what is your prediction for the gold price and the silver price?
Well, look, I mean, I've long been...
Could be your personal view also, of course.
Yeah, well, as a gold producer, our first focus is just to get our production delivered at the lowest cost. So our business is not predicated on a gold price assumption. So the view that I will share with you is my personal view. A bit like the copper price, I think gold is getting harder to find, and demand is ever increasing. And if you look at the amount of buying, particularly from central banks over the last 12 months, and that's all information that's provided by the World Gold Council. And I would encourage any of your viewers to look at the World Gold Council website. They put some fabulous demand supply analytics out there for all to see. And what we see when you look at that data is limited supply, but ever increasing demand from a broader range of investors. But when central banks are buying at the scale that they're buying at the moment, that bodes really well. So limited supply, increasing demand, and if I look at how gold has performed this year alone, where it's touched and over $2,000 an ounce, it's actually performing as gold should in times of uncertainty. In addition to that demand supply dynamic, gold is responding as investors want it to. It's proving to be a safe haven in times of uncertainty.
Okay, and maybe a price target for gold?
Oh, I don't have a price target. My target is that it only keeps going up. I mean, the journey is, of course, choppy. It moves around a lot as a lot of commodity prices do. But if I look at the range at which gold has moved in the last few years, it's much narrower, therefore less risky, less variable than a lot of other metals and/or commodities. So, as I said before, I think gold is performing as it should. It's proving stable, but the underpinnings are for a higher gold price over the medium term.
Okay, super. I see it the same way, definitely. Let's move shortly. We have spoken about Haile. That's all up and running. That is fine. DDPO is fine. So let's move to New Zealand because you have also fantastic mines there with Macros. Also, I think with Pericure Palmer is getting really, really interesting. Can you comment a bit on that? What's the status?
Sure. Well, we'll start with Pericure Palmer. So Pericure Palmer is this really exciting exploration project that we have near Waihi. It's the ore body. I think it's an exploration prospect is 10 kilometers away from the Waihi process plant, and we put out some fabulous drill results. This is an ore body that I think we have a resource of about 670,000 ounces at an average grade of 13.5 grams per ton. But the drill results that we put out late last year show the potential for continuation of mineralization that is very high grade. So we continue to drill it. We did have some challenges in getting access to the some drill platforms and doing the level of drilling that we wanted to last year because of drought conditions. And so we probably haven't made the rate of progress that we would have liked. But one of the hardest things in the world is to find gold, and here we have this really exciting mineralization exploration project that is so close to our existing operation that when we put the drill in, we are getting fabulous drill results from. And what we put out with our full year results is an updated estimate that should the consenting, which is the permitting process, go as planned, and we develop this as we currently think it should be developed, that it will be an ore feed into the Waihi operation from around 2030, 2031 onwards, which seems like a long way away, but that's about the time it takes to get a new mine into fruition, particularly one that we're going to do in a very environmentally responsible way. It'll be an underground mine. It'll be fully conveyed from the mine all the way to the process plant, so virtually zero expression at surface, primarily powered by hydro-powered electricity. So it really offers to be a very environmentally sound mine, and at producing that kind of grade into the Waihi mill, we're excited about the potential for it to be very profitable and a high return investment for our shareholders as well.
Okay, super. Yeah, profitable. That's one thing I wanted to discuss also, because in your documents was stated that the Waihi's AISC were $2,174 per ounce, and in the fourth quarter it was $2,035. So what's the immediate plan to really bring that down? Because you want to make some money on that, right?
Yeah, absolutely. Look, Waihi didn't the operation that's before Pericure Palmer did not have a great year last year. Its first half of the year was really disappointing, and that's because they for two reasons. One, the afflictions of COVID, and whilst the rest of the world's moved on from COVID, New Zealand was in a very isolated state for most of the COVID period that the rest of the world experienced. Opened up its economy, and COVID related disruptions manifested themselves most strongly in the first quarter of 2022. And then also we just didn't get the grade out of the mine that we projected that we would do. The third quarter was a much better quarter. The third quarter is a lot more representative of what we think the mine is capable of producing, which was at a much lower cost and very cash generative. So in the year ahead, we've put guidance out there that is like 50% higher in production volumes than 2022, and that stronger production, producing more gold at much sustained milling rate, is what is the primary driver of getting the cost down in the year ahead. And the goal is for Waihi to be a profitable business from the period 2023 up until Pericure Palmer comes into production with its much higher gold rate.
Okay, super. How looks your financial situation? Meaning, what is the debt today? How have you financed it? Are you affected by those rate hikes the last 12 months from the Fed?
Look, we have a net debt of $170 million. We're holding $83 million of cash. I think we've got $203 million of bank debt. It's all bank debt and equipment leases. So to the extent that we have those like a net debt position, we are exposed a little to the increase in interest rates. We did make a big reduction in our net debt last year. We reduced our net debt by 28%, and we will continue to apply our free cash flow generation to the reduction of debt for two reasons. One, because the interest cost is higher than it used to be, but B, we believe in that by getting our balance sheet ever stronger at a time that we have a number of growth options to pursue, that allows us to be able to progress those growth options from a position of financial strength. We do still, as you mentioned right at the beginning, want to be paying a dividend. So we get into this beautiful combination of being a business that pays dividends, strengthens its balance sheet by a reduction of debt, and continues to invest in the growth options that we have across our portfolio. And that's about the perfect combination for a gold company.
Correct. Perfect. Yeah, invest in the future is something that is really important. Last question. Let's talk about exploration. Where do you see, let's say, strengths? Where do you think, maybe we have to do a little bit more for the future? Can you give us a short idea on that, please?
Oh, sure. Look, I mean, we have exciting growth options from an exploration perspective around 3 of our 4 existing assets. And the best exploration is something that's close to where you presently have a mill, because that gives you the greatest chance of converting exploration success into economically mineable and profitable gold. Haile is really exciting for us. So we're underground now for the first time, developing that underground mine. And as I said, that is the primary driver of the increase in production for the company and the reduction in all-in sustaining costs over the years ahead. That we continue to explore underground around Haile. We want to expand the Haile underground ore body. It's called Horseshoe. We're drilling to Palomino, Aquarius, Ramona. We're drilling all around and underground Haile, because every ounce of gold that comes from underground, if it's consistent with what we're currently showing for the underground, is higher grade than the open pit, and it has less cost to move. So Haile underground is a big area of exploration focus. Didipio, as I mentioned before, Didipio is our lowest cost producer. It produces gold and copper. That ore body is open in all directions. We put out some wonderful drill results in December as relates to the Didipio underground mine. And this mineralization we found is right next to, like 50 meters away from where we currently have drives, so access to that gold. So we'll continue to explore around the existing ore body there and near the ore body to Didipio. And then thirdly, as we spoke about before, Pericure Palmer, we are increasing our activity there, or looking to this year, to kind of fill out our understanding of that ore body. We're spending about 35% more on exploration across our portfolio this year. And that's because we have the financial capacity to do so, but we also have the targets, the prospectivity near our ore bodies that warrant that investment. So we're pretty excited about the exploration potential in the business.
Super, perfect. That sounds like a great game plan, and I look forward to a higher dividend.
you and others.
Yeah, super, perfect. Thank you very much, Gerard. I wish you all the best, and talk to you soon, and hopefully we see us then also soon in May.
I appreciate that. Thank you.
Thank you very much. All the best.
Bye-bye.
Yeah, ladies and gentlemen, that was Gerard Bond, the CEO of OceanaGold. You heard it. The company is back on track on full throttle, I would call it, really growing. He said it already, over the next 3 years, 9% per annum they want to grow, which is approximately 30% all over. And the company is producing gold, but also don't forget about the copper from the Philippines. I think that is a big bonus, a big joker. And the company is solidly financed and pays, again, a semi-annual dividend of 1 cent, and I have a good feeling that this will rise quite soon here in the future. So I would suggest you check out the company. They are doing a great job. Thanks for watching us, and bye-bye from Switzerland.